Good morning, ladies and gentlemen. How is everybody doing today? Thank you guys once again for tuning in. If you don't know why you're here, well, you're here because all we do is really look at stocks for about 30 minutes, answer some questions, have some fun, and you're in the right place. That's all I got to say. Good morning, John. Good morning, Vincent. And I'm just going to call you Tina up there at the top in the pink. And then Mr. Perez. How's it going, bub? So anyways, I got a few of you guys in here. I'm sure it'll populate a little bit more here as time prevails. We'll wait for some people to catch up and get in here before we start running through things. But if there's a few stocks that you guys want to look at now, shoot them out here while we don't have as many people in here before it gets all hectic and crazy. So if there's something you guys are looking at, let me know now or want me to take a peek at. What's going on? Hey, yo. Good morning, morning. Wish you was clean like me. You know what? Me too. I'm not looking clean today. I haven't shaved in a while. Didn't take a shower this morning. But hey, that's the life of being a trader. You don't have to shower or shave. All right, BLIN. We're going to have to go over that one twice, but we'll start it off now with BLIN. Sure, why not? All right, so BLIN yesterday kind of picked up, had a big squeeze, got halted. Today, it's kind of up over yesterday's high. So it is a low float stock. It has about 150,000 shares. The float's about 150,000, 200,000 right now. So really low float on BLIN. It did get some news this morning. If you check the news, it says Bridgeline announces multi-year license renewal with global biopharmaceutical company. So that's good for them. They're doing all right. The move was pretty decent. It has been downtrending for a while. It does have a bit of outstanding shares. It doesn't really have a big short float, so it doesn't meet all the characteristics for like a BPTH or an ABIO. But, ABIO, we should probably take a look at that. I'm glad I said that. So it's okay. It's decent. But it's not. It doesn't really meet the full characteristics of a great penny stock. It has been downtrending. You can see every time it kind of pops, it does get sold off. Granted, there's a little bit more attention on it today. I think it's worth watching. I really do. I do think it's worth watching. But all it's done so far this morning is just spike. It hasn't really trended. So nonetheless, we're probably going to see it sell off here pretty soon. So I think it's worth watching. It has a really low float. It does have some decent news, but it's missing the characteristics of big short float, and it doesn't have minimal or low outstanding shares. So I think it's okay, but not A1, right? It's okay. So it's worth watching, but don't get your hopes up. And if you kind of go back, let's say, the charting here isn't really great for the stock, but it's got resistance tops all the way up here at 14. If it gets to 14, it would have had a great day, but it's really got to get through this top wick here at about $10. Once it gets over that, at that point, I say it might have a strong push. But you've seen how it moved yesterday. It is a low float, so if enough people come in and start buying it today, we could see it actually pop pretty significantly. Okay. I'm going to take a look at a few of these stocks people are mentioning, and then I'll run into mine. You guys could probably already figure out what I'm looking at anyways without even me having to go over them. KXIN. Whoa, interesting. That 11 dropped out 1 year chart. Why though? When did the drop start? The drop started on 422 and on 429, 422. Well, that's cool. Can't even go back that far. So I don't know why it dropped out so much. I can't get far enough back on the news. But if I could, there's a reason why it dropped so much, and I don't know why. It's not a heavy volume stock. So day trading, you got to be pretty quick. It is trending up, so I think it's worth watching in terms of the fact it is kind of trending up, but I'm not crazy about it. But this could be good, right? If it breaks up and over this wedge, you see top, point, We could see a little breakout here on it today. So I'd say watch it for like a break over, $4. See how it looks with some strength. If it's curling up towards $4, you could see a little pennant pattern here, and watch if it breaks out. If it does, it could have a good move. Obviously, because it came from a really big drop, and it does have resistance right at about 5. So I'd say if it starts picking up, starts moving the way you want, your first target area should be about $5 on that stock. Amazon, let me take a look at Amazon real quick, and then I'm going to hop into mine. Amazon. So yeah, if I could just touch here a bit on Amazon, and this is in regarding any of your larger cap stocks. Pretty much all your large cap stocks today are going to be following the market. After the big market gap down, after Trump tweets he's going to raise tariffs, blah, blah, blah. After that big gap down, all the stocks are going to follow the market. So today, we're probably going to see the same. We're going to see stocks trading very similar to the way that the market trades. Anytime the market starts to get a bit bearish or have some negative downturning moves, we tend to see stocks follow closely to the Dow Jones, NASDAQ, and the S&P 500. So with that being said, what do I think about Amazon in the intraday standpoint? Do whatever the market does. Whatever the market's telling you to do, that's what you should do with Amazon, because Amazon's most likely going to follow that same sentiment for today. It's just what happens. So personally, I'm kind of on standby in the morning for all large caps. First, I want to see what the market's trying to do. So we might as well take a peek at the market. Okay, so the market, you can already see it's trying to roll over here. It's getting bought up a little bit. So, whether it goes up, I'm actually a little bit more bearish for right now. I think the way it's holding pre-market actually looks pretty good. For it to drop down like this and then have these two kind of bounces, that's not a bad sign. It tells me that people are trying to keep it above the after hours low point here on the market. So I think it's today's more or less a day to watch the market closely, and then dictate how you want to go about trading any of your large cap stocks. Okay, so let me just touch on the market here more. So we had the gap down yesterday from that tweet. The market filled the gap, so it already filled its gap, did the bounce move yesterday. And even with the market bouncing up pretty big yesterday, you didn't see a lot of stocks bouncing very hard. Some did, but a lot did not as well, which just goes to show that after that gap down, people are kind of like, whoa, hold on. Do we really want to be buying these stocks up just yet, right? They didn't. You'd think with the market having such a strong move from 289 all the way to 294, 5-point move basically from open to the close for the most part, close to a 5-point move, you would think that stocks would have had a rip-roaring day, but they didn't. Most didn't. They actually kind of stayed stagnant, and that's because nobody was really wanting to buy into that dip on those stocks with such a big gap down. They want to see, okay, can this gap down recover and can we hold, or is it going to be a start of a downtrend? If it's a start of a downtrend, you don't want to be buying into those dips, okay? Next, so we'll take a look at GWPH. So I kind of threw these two on just because they're earnings plays. For the most part, I'm kind of stagnant right now. They're really, for the past 2 days, hasn't really been anything that I like dramatically that I've been like crazy about. But GWPH is a little interesting. It's into a 52-week high, very decent earnings report. Had a nice spike, kind of grinded back up. Now, it doesn't have a ton of volume right now, but this could give us a nice couple point range from high to low. So for right now, I'm just keeping an eye on this. I'm going to watch it, see how it develops. I could care less if it goes long, and I could care less if it goes short, right? So, a lot of times people are like, oh, well, which way is it going to go? It's like, well, I have a bias, but I don't want to be too biased, right? So something you will learn as time goes on from intraday trading is it's not about trying to guess and be right on a way that it's going to go. It's about watching it, following it, and reading it from pre-market after hours to the time market opens, watching the market, getting a feel for the market for the day, and then making your trade based on significant levels that it might reach within that day. So, a lot of times, like, hey guys, I'm gonna follow this long, and then it goes short. Everyone's like, oh, well, you're wrong. It's like, yeah, but I was still short. So, again, it's not about having to be right or picking a side. There's no right or wrong side. There's only the right side, and that's the side that the stock's moving. Okay, so there's not right and wrong. It's whatever way the stock's moving, you want to be on that side. So sure, we have a gap up here today on GWPH. Great, fantastic. Does it mean it's going to go higher? No. Could it go higher? Yeah. If it does go higher, will I trade it? Maybe. If it goes lower, will I short it? Maybe. All depends on the way it sets up intraday at the moment in time that I'm watching it. So, I can go and say, hey, we have a pre-market high here. Fantastic. And we have a dip here. Fantastic. If it drops all the way down to this level, it'll probably bounce, right? So if GWPH crashes out of the gates down to 187, there's a strong chance it's going to bounce on 187. I can get long there, trade up a reversal, okay? If it presses up out of the gates, pulls back, holds pre-market high levels, we could keep going higher. Might want to take a trade there. So again, it kind of depends on how it opens up and starts to maneuver throughout the day. So anyways, watching GWPH, long bias initially, and if that fails, then I'll watch it short bias. Nonetheless, GWPH earnings play, going to follow that. Another one I'm watching as an earnings play is SEDG. So SEDG doesn't look as good as it did when I first looked at it with this down dropping candle. That's okay. But again, nice strong move up, sideways consolidation. So this is one where I am actually looking for continuation out of the gates. This is more of a setup where I would look for, it's not the best one, but it is still decent, where I'll look for this to kind of break this trend and kind of squeeze to the upside. We ideally need it to stay above the after hour dip level right here. If it wants to be more of a continuation play out of the gates, it's primarily got to stay up above 50.86. If not, some people are going to probably try and sell that down. If it starts to drop out of the gates, I'm probably not going to chase a short down on it out of the gates. I'd probably wait for a retrace move first. But I think SEDG is worth watching. It's up towards like 50, what is that, like 50, 51, something like that, right about 51, 52. So it does have resistance at 55 and 58. So if this thing does get cooking to the upside, first target long would probably be around 54 on it. Okay. Those are really the two stocks I was looking at. I'm watching some other ones. I'm keeping an eye on Netflix and Nvidia and Facebook, and I watch those all the time. So it's like whenever I put two stocks up here, just know that I have probably another 10 that I'm watching, right? But I'm just not going to go over every single one of those stocks throughout the day. Good morning. Yeah, good morning. So David, if when I scalp trade and I use a market order, how do I get filled if you trade with a lot of shares? Well, David, because it's a market order. So again, every once in a while you'll run into a situation where you'll use a so every once in a while you run into a situation where you might be trading with a lot of shares and you take a market order, and you'll notice that sometimes even using a market order, you don't get an instant fill. And that's a misconception that a lot of new traders have, or just traders in general think that if you do a market order, it means instant fill. No, market orders don't mean instant fill. That has been, for the most part, they're usually pretty instant, but that's a misconception that market orders are instant fill. So if you think that, get that out of your head right now, because you're thinking wrong already. So market orders don't mean instant fill. You have to understand when you go to the market, what are you actually doing? Nobody even knows. Right? If I were to ask, if I were to ask you guys this question, probably like 90 of you would probably give me the wrong answer. And that's fine, because you just may not have learned it yet, but that's okay, because I'll teach you it right now. Some of you probably know, some may not. But again, when using a market order, a lot of people feel that it's an instant fill all the time, always and forever. But nobody even knows really what's going on when you buy a market order. When you buy a market order, people are like, oh, I'm just going to the market to get shares. It's like, yeah, but who's giving you those shares? Because when you do a limit order, the transaction's going between you and another trader, or essentially usually you and another trader for the most part. We'll just keep it at that, keep it simple. When you do a limit order, you're putting out, when you do a limit, you're saying, hey, I have shares and I want to sell them at X price, and somebody else has to go, hey, person A is selling shares at X price. Do I want to purchase those shares from him at that price, right? Or they're like, no, I want to purchase shares, but I'm only going to offer this much. So there's a bid and the ask. It's like buying a car in Craigslist, right? You have the bidder, which, by the way, I might buy a car today. You have a bidder who's me, right? And then the seller who's you, right? Like, I want to go buy your Ferrari, right? You're trying to sell me a Ferrari and I'm trying to buy the Ferrari. You're going to ask me to pay, $1 million, and I'm going to go, screw you, and I'm going to bid 900,000, right? So there's a $100,000 difference from the bid to the ask, from the buyer to the seller, right? And then you two, on average, would negotiate maybe 50-50 and go, all right, I'll give you 950,000, you come down from $1 million, and both are happy because we didn't get totally screwed over, yet I didn't get the best price. See what I'm saying? So when it comes to markets, in the stock market, there's always a bid and the ask. There is a buyer and a seller, someone asking top dollar for you to purchase their shares and someone asking to basically rape you over on your shares, right? Give me your shares at a dirt cheap price. And then you have the market order. The market order is in between the bid and the ask. See, that's another misconception is people think that when you put a market order in, you can get filled at whatever price ever. No, not it. Market orders, you will get filled within the bid-ask spread. So if the bid-ask spread is $5, yeah, you could purchase 1,000 shares and you could get whipsawed 3 points off from where you want to buy. So should you do a market order on a stock that has a 3-point spread, 5-point spread? Probably not. But if you want to do a market order on a stock that has a 3-cent spread, what's it matter? It's only 3 cents. So yeah, when you're doing 10,000 shares, a 3-cent spread could be $300. But granted, if you're trying to get in 10,000 shares at a limit order, you're probably not going to get a full fill at 10,000 shares at the price you want, which means you're going to pay a little bit higher price for your additional 5,000. So it's like, you have to weigh the apples sometimes. But when you do a market order, you're getting shares from a market maker on an exchange. The market makers, right? People think market makers are evil people and they screw everybody over. To a certain extent, yes, but to a certain extent, no. Actually, market makers have a very important job. See, being a market maker is a liquidity provider. They're the ones that keep the market active and flowing and liquid. And also, you could argue that high-frequency trading algo computers help make the market more liquid, blah, blah, blah. We're not going to go there. But market makers provide liquidity, meaning if Connor wants to buy 15,000 shares, there may be nobody willing to sell me 15,000 shares. But it's the market maker's job to fill and keep the market liquid. So he may not even want to sell me 15,000 shares, but since I'm buying 15,000, he has to be able to provide me those 15,000 shares. Okay? So if I want to go buy 1,000 shares of Apple right now, I can hit a market buy and the market maker is going to give me 1,000 shares. And since he has to provide that liquidity, he gets a little bit of a favor by being able to play with that order within the bid-ask spread. So he might charge me a little bit more, but that's because I'm basically getting my instant fill for the most part, most of the time instant fill. I'm almost getting an instant fill right away. I'm getting in the stock. No questions asked. I wanted 1,000 shares. I went to get them. I didn't have to put out a limit order or a bid and wait to get filled. I pretty much got filled instantly. He provides liquidity. So whenever you do market orders, you're getting provided from the market maker. And whenever you sell market orders, that market maker is buying from you or he's taking on those shares, right? So yeah, imagine when a penny stock is flying up $5 a share and you go to dump 15,000 shares. Do you think the market maker's stupid enough to want to take those 15,000 shares at the top of a spike? No, he's not. He knows better. So he's going to try and get a little bit of a lower price on those shares that you're getting out, so at least he gets them lower and then he can try and flip them really fast to somebody up top, so to speak. But yeah, when you're doing market orders, you're going through the market maker. He's providing the liquidity for you. And hell, that went on quite a while. We don't even have time to really look at stocks because that was a good lesson. But that's what's going on when you're doing market orders, guys. So to answer your question, how do I get filled? I guess that pretty much answers it there. wow, that took a lot of time, but I was really on a roll there, so I really couldn't help myself. And then someone will say, don't use market orders. Like, I use market orders all the time. You have to, and people think it's the evil, it's the devil. Like, no, I do market orders all the time and do just fine. All the time, right? Are you going to get prices that you don't want occasionally? Yes. Are you going to get fills you don't want occasionally? Yes. Can you get in instantly? For the most part, yes. Do I have to wait to get a limit order in? No, right? So if you just want to do some quick in and out trading, they'll do just fine, right? So play with it, see what you like. I never have issues with it. I do limit orders and I do market orders every once in a while. No, not buying a Ferrari. Actually looking at a 2004 Pontiac GTO. Got 350 horsepower. Going to put cams and headers on it. Maybe get up to about 450. Do a little exhaust on it. But yeah. So yeah, sorry about not really going over stocks. We got a couple minutes here, and I really got to head back. Stock is not better than Forex, and Forex is not better than stock, right? There's people trade it for different reasons. Foreign exchange currency, the market's open like all the time. You can trade all the time. It's a directional market, so you can buy and you can sell. In terms of, you can only short a stock if there's shares available to short. That's not the case with currency. You can basically be short whenever. So there's differences, but I wouldn't say one's better than the other. It's all preference, right? It's like, do you like trading penny stocks or do you like trading large cap stocks? It's all preference based, really, at the end of the day. How do I don't trade without the jewel. I have the jewel right here. It's unfortunate, but she's right here. Oh, all right. There's one more thing we got to look at. That's ABIO. So we're going to take a look right now. Let's see where it's at. I know some of you guys are like, Connor, but why would we be looking at ABIO? It already went through its spike. There's a reason, and it's probably going to spike again. It might. Pretty good chance it does. So watch it when it gets down to the 9 moving average. So when ABIO and if ABIO ever reaches about right now about $8 something, 8 something. Where are we at? 11. Yeah, if it gets down to about 835, watch it long bias. You might as well just hop in long because there'll probably be a little move. So anyways, ABIO, $8 mark, keep it on watch. Same thing with RHE. There was a while ago. I called the one on RHE. Not like I'm a genius, but like this move here predicted that one because it spiked and then it crashed down to here and you're long it there. But anyways, keep ABIO on watch as well. So half the time, so I use Trade Ideas. Trade Ideas is my scale. A lot of people use Trade Ideas. It's no like secret, but there's a link in the description. It's an affiliate link if you want to use it. If you want to check out their services and how much it all, I'm not going to say, please use my affiliate link because I'll be just fine if you don't. But if you do, I would appreciate it. But anyways, link in the description for Trade Ideas. That's the one I use. Yeah. Do I, I don't even need it. I don't even really need a stock scanner these days to trade stocks. That's another thing, right? Stock scanners don't make you really any better of a trader. It just gives you more data to look at and more data to analyze, and so it doesn't even really make you. It doesn't make you a better trader, and it won't make you or break you. I could trade stocks all day long without even having a stock scanner, but it's good to have it for some things, and so that's why I have it. Trading since I think I was 20. Started investing at 18, started trading at 20. We're almost 26 now. And I've been doing, YouTube for 2.5 years maybe now. So I basically been doing these streams and these watch lists and videos for over 2.5 years. So it's like the learning my learning curve has been expedited tremendously, because I get asked a lot of questions, so I'm always having to learn something new half the time. But anyways, guys, I got to get back to our private group so I can relieve our admin, Brandon, and he can get into his room. So anyways, anytime you guys want to join us, private rooms, everything's linked in the description. Feel free to check it out. Nonetheless, I will see you guys tomorrow morning for another trading day. So everybody take care, and I'll see you guys tomorrow.